If you're a seller, you basically still have some weeks left of this fall market. The 1 month supply, 802 for Brooklyn, is up almost 3%. Buyers are favoring some properties over others. Welcome to this week's look at the state of the New York City real estate market, where I take a look at the luxury market, the Manhattan market, and the Brooklyn market. I do it because I want you to be informed. It never hurts when you're a consumer to be informed. Welcome to this week's look at the state of the New York City real estate market. This is for the week of October 9th to the 15th. We're going to get started right now with the luxury market. Then we're going to move to the Manhattan market, then the Brooklyn market. Then I'm going to sum it all up, give you my thoughts and my recommendations for how to be most successful in this very, very challenging market. This will be very helpful for people who are looking to buy or sell in this market. So stick around for that. If you have any questions, as always, please post those below. There were 16 contracts signed last week for those properties that were priced at $4 million and above. That is 10 fewer than the previous week. 5 of those contracts were for those trophy properties that were priced at $10 million and above. There were 10 condos, 5 co-ops, and 1 townhouse. 10 of those properties were uptown and 6 were downtown. The number one contract was West 28 AD at 500 West 18th Street, was asking a little over $22 million. It is actually 2 units. They'll be combined by the sponsor, and the overall total square footage for the 2 units will be a little over 5,300 square feet. There are beautiful Hudson River views, 6 bedrooms, 6 bathrooms, and 2 powder rooms. You might remember that this is actually 2 buildings, 500 West 18th Street. It is called One High Line. It has quite a comprehensive amenity package, a fitness center, a 75-foot lap pool, spa treatment rooms, golf simulator, children's playroom, private dining, games lounge, and a garage. And the services, as you might recall, are offered in the adjacent Faena Hotel, and this is all part of this project. The number 2 contract was the penthouse at 137 Duane Street. It was asking $18 million, and it was reduced from $19.995 million when it was listed back in April. This is a condo. It has 4,942 square feet. It includes 4 bedrooms, 5 bathrooms, a den, screening room, and 4 terraces, totaling over 7,200 square feet. It has a beautiful landscape rooftop terrace with an irrigated lawn, paved paths, and native grasses. The seller purchased the unit for a little over $7 million back in February of 2008 and spent quite a few years extensively renovating the property. This is a 5-story, 19-unit building, and it has no amenities. Okay, now we're going to take a look at the stats for last week for the luxury market. The total weekly asking price sales volume, 145,463,750. Average asking price, 9,091,484. Median asking price, 5,995,000. Average discount from original ask to last asking price, 6%. Average days on market, 530. Okay, that's it for the luxury market. Any questions, please post those below. We're going to take a look now at what happened last week in Manhattan. Let's start with the 1-week look at Manhattan. Supply 336, that is down for the week, a little over 5%. Contract signed 152, down 15%. We're going to talk more about the signed contracts and what the overall liquidity is looking like in Manhattan. Off market down over 19%, 152. The monthly view shows the supply at 1,564. That is up over 4%, still light historically. Contracts signed down over 12%, 607, and the off-market properties, 664. For the month, it's risen a little over 9%. As you could see from the liquid market pulse chart, this is actually looking at this 30-day read of liquidity, and we can see that we are kind of tracking downward in terms of our liquidity. We should really be at about 900 contracts for this month, and we're quite light in terms of that. As you can see, we are down fairly significantly. October really should be our peak activity time for the fall market. We still have a little time left, and of course, we still have some time in November. So let's see how the rest of this fall market begins to shape up. We're definitely light on liquidity, as I said. If we look at this liquidity pace chart, we can see that the liquidity is 607. This is very light for us. We definitely would like to be seeing more liquidity. Overall, this is kind of balanced, though, because we're definitely light on inventory, historically speaking, but we're also light on contract activity. We see the supply is up about 1.4%. That's in line with seasonal trends, but overall, we're still very light on inventory. If we look at the demand, we see that the 30-day liquidity measure has dropped a little bit, and we knew that September was very quiet, so we've bounced from that. We just haven't bounced very hard so far. As we look at the new listings, we see that they're ticking down a bit. That is typically what we would see as we move further into October. We see also the contract activity was down. We were dealing with some holidays, so that likely has played a role. We'll have to see what happens in the coming weeks. We're going to move now and take a look at what's going on in Brooklyn, which frankly is quite the same story as in Manhattan. And then I'm going to sum it up for you, give you my thoughts. But if you have any questions about Manhattan, please post those below. This 1 week look at the supply in Brooklyn shows a nice little pop, 32%, a little over 222 properties came on the market last week. We also saw a little bump in the contract activity, 115, up a little over 6%, and the off-market properties dropped almost 28%, 60 for the week. The 1 month supply, 802 for Brooklyn, is up almost 3%. Contract signed down, pretty lackluster for the month, down almost 15% at 422. And if we look at the off-market properties for Brooklyn for the month, 312, that has risen up 19%. This liquid market pulse, again, is showing us to be heading more and more into a buyer's market, because we are just not seeing the buyers coming back into the market in a very strong way. Yes, are we seeing contracts being signed? Yes, we are. And we aren't seeing a whole lot of inventory coming into the market. So overall, it's remaining fairly neutral. Although, as you can see, according to this liquid market pulse chart, we are definitely seeing that it is starting to favor the buyers. If we look at the liquidity pace chart, 422 contracts were signed over the last 30 days. Again, we're in the bounce off of September, so this includes some of the September activity, which was pretty grim. And so, as we move away from that data and we get more and more of just the October data, we'll have a better measure of what October's more, let's call it peak activity for the fall market, is going to show us. If we look at the supply, the Brooklyn supply did tick up on the week, but it does remain below prior years. The demand, the 30-day liquidity is ticking down. It does include some of the quieter days of September, so we are seeing that the liquidity is down. So we saw that the new listings appeared to increase just a little bit. They remain kind of on trend. Contracts signed, we had that holiday shortened week. However, in Brooklyn, the contracts did tick up. Despite the holiday week, we did see the contract activity for last week in Brooklyn increase and even exceed last year's level, which is great. Okay, that's it for Brooklyn. Any questions about the Brooklyn market, please post those below. So where are we in the New York City market? Well, we saw a pullback in luxury market contract activity. 10 fewer contracts were signed. In the luxury market, as always has been the trend, condos are outperforming co-ops. Most of the contracts being signed are new development contracts. And for the Manhattan and Brooklyn markets, market-wide, we're definitely in a low liquidity environment. We are seeing that buyers are favoring some properties over others. So for some sellers, this is a tough selling environment. And we're also seeing that we bounced from the very slow days of September. We just haven't bounced particularly hard. It's hard to say where the rest of this fall market is going to go. We still have some weeks left. We still have the rest of October and into November. We're essentially we could describe this as a kind of fair market for buyers and sellers, with the inventory, the supply, and the demand essentially being in balance for the moment. If you're a seller, you basically still have some weeks left of this fall market. October is historically the peak activity time for the market. So you really, really want to make the most of it. You've heard me say, if you're not getting the activity that you want, you really want to be making an adjustment to your asking price. It is really the one thing that you can do that is the most powerful thing to attract buyers. Make the most of the fall market if you want to be a seller in this market. What we've learned from the data is that this is a market that is quirky. It is definitely favoring some properties over others, leaning towards condos that are in mint condition, brand new, and they are shying away from co-ops and properties that they perceive as needing work. So it's not your fault if you have a property like that, but you have to decide if you want to be a seller in this environment. If you have a property like that, you may have to make a price adjustment, perhaps below what you originally thought. The other option is you can decide you don't want to be a seller in this environment. We're not seeing any forecasting for lots of increases in prices on the horizon. So you need to be thinking, if you do want to sit this out, how long you're willing to do that for. 5 years, 7 years. You have to consider market cycles. So just something to think about. Buyers, if you are a buyer in this environment, this is definitely your buy signal. And there are definitely some really interesting opportunities out there for you. This is a low liquidity environment, as I have previously mentioned. You don't have quite as much competition, particularly if you are a cash buyer. There seems to be a lot of opportunity for you. So think about what you might want to be doing. And as I have said previously, the longer a property is on the market, the likelihood of having more negotiability there is higher. So take a look. If you see something that's been on for a while and it has been something perhaps you've had your eye on, you might want to start a conversation. This is a tough market. This is probably one of the toughest markets that I have seen in my 23 years of doing this. It is a complicated market. It is a market that is kind of defies a certain kind of logic in a way. It's taken a while for the data to come in so that we could make sense of the puzzle of this market. I'm going to keep an eye on this, and I'm going to keep reporting on this so that you will have the benefit of the information. so that you can know if you're an owner and you're thinking about what you want to do, you'll know how this market could be affecting your position. If you're a buyer or seller, you'll have the information so that you can be informed. As always, I want to thank Ocean Market Report and Urban Digs. The work that they do helps me to help you to make, hopefully, great decisions. I'll be back next week with the very latest news on what's happening in the New York City real estate market. In the meantime, take care.